If I told you that right now there is a £100 million AI supercomputer spying on all of your banking, eBay, PayPal, all of your social media, everything you're saying and doing online, it seems these days is tracked, you probably wouldn't be that surprised. We're in the 21st century, and wherever you're in the world, it seems you cannot live an off-grid life. But when those AI-powered supercomputers are owned and run by the tax authorities, HMRC, the IRS, wherever you are in the world, I am sure that you are on a computer somewhere as a taxpayer. You are being tracked, and all of this data is forming a picture of what the tax authorities think you need to pay. Hello everyone, I'm Backyard Bullion, and I like to talk about shiny things here on YouTube. I am not a tax advisor, but I have been through an HMRC audit in the past, and I think it's very important to talk about these subjects that will get you red flagged with HMRC. I'll talk a little bit in this video about what red flagged my own audit with HMRC, but also some of the pitfalls that I see a lot of people just not taking seriously right now in the world. Whether you are just a stacker, enjoying your investments, buying, sharing them online, you are somewhat putting yourself at risk. Not necessarily in the way you might think, but even if you're doing something completely fine and normal, investing in gold and silver, you will need to prove your innocence. That's how it works with the tax authorities. They think you owe some tax because of the data that they've got. It's then your responsibility to say, hey, actually, no, and this is why, and this is the reason that I think I'm in the right. It's what happened to me when I did my audit. Now, to that end, you'll find a theme in this video that is very, very, very important, and that is record keeping. To that end, there is a great segment from today's sponsor, the Vault Co. We'll talk more about them in a minute, but there is a link in the description box to that record keeping platform that you can use to help keep your records in good order. So the first bit, I've got a little list here. I've actually done some preparation for my video today. It's not like me to usually do it. I just turn on the camera and talk sometimes. But the first thing that I'm going to talk about is lifestyle and social media. So the HMRC Connect system, as it's called here in the UK, which is a little bit of an innocent sounding name, quite frankly. It's sort of, oh no, we're going to connect with everybody, connect with all the taxpayers. Actually, it's just connecting all the dots of all the different data points that they are just scamming off the internet to get to you, whether that be through your own social media profiles, you sharing a whole bunch of photos on your Facebook about your gold and silver purchases. Look, I mean, I wouldn't recommend you go and do that on your own personal Facebook accounts, but there are a lot of people in the community that will have their own sort of almost like YouTube persona that's been set up. You'll keep it very private in terms of your own personal names and stuff, but that will be recorded. And of course, behind the scenes, the supercomputer will know that it is you, Joe Bloggs, that owns Joe Bloggs Bullion on YouTube and does little videos about it. So sharing your videos might seem like a great fun thing to do, but remember, this Connect system has connected all the dots. It knows what your income is. It knows what tax you're paying every year. If you're a self-employed person, you'll be doing self-assessments every year. If you're an employee, they will know, of course, from your employer what your tax will be. And if you've got a salary, let's say it's £30,000 a year, and you've suddenly started a YouTube channel showing copious amounts of silver and gold that you're buying on a weekly basis, that system might red flag you and say, hey, hang on a second, why are you able to afford lots and lots of shiny gold and silver things? Now, you might not be doing anything wrong at all. You might have cashed in some savings that you've had over the years. You might have had an inheritance. You might have had extra cash left over if you've moved house, sold a house, you've got extra equity that you've got, you want to invest. Maybe you're just an individual that doesn't have kids that drain your bank account every month, and you've got a little bit of extra money that you're saving from your employment. And that's absolutely fine, but having the records to back that up is really, really important, and not to be underestimated as well, because this Connect system is going to paint everybody with the same brush, and that's what it feels like here in the UK right now. It feels like we are all being brushed with this tax avoiding, we're not paying what we should approach by government, by the authorities, because there is a tax shortage in that people, well, they're not paying their taxes, but cost of living being what it is, it makes it difficult for people to go out and spend in businesses, and therefore business rates are down or the business takings are down. And so there is a tax shortage in this world. So to the ends that we are going to talk about, record keeping is the most important one. And that's where we're going to have a really important look at a very good piece of software that helps you keep your records Welcome to The Vault, a fantastic piece of software to help you keep on top of your record keeping for Bitcoin, gold, silver, and cash. With easy to access software, you can keep those records and indeed even see the different value of your holdings in US dollars, euros, or pounds. At a glance, you can see what the profit and loss would be for all the different categories with individual data entry points shown for their profit and loss as well. A very simple way of keeping track of your records. But as with all record keeping, it is only as good as the data that you put in. And the deposit fields here are super simple to use with easy to place data points for all of your entries. It is just simple and fantastic, and it updates instantly to live prices for gold, silver, and indeed even Bitcoin. If you need to withdraw, if you've sold some gold or silver, you can do so, and it updates instantly. You can see all of the historic activity from your data entry points as well. Just a really simple and succinct piece of software to use. So if you're interested, please go and check out the Vaultco's website. There is a link in the description box below. You can secure your software license for just $99 today, which is a one-off lifetime payment. You then get that software on your machine. 2 machine license. You can see here there's a whole host of other different features which you can find out more about on the Vaultco's website. There is always live updates to the pricing. It is a fantastically linked piece of software, but the most important thing is your data stays on your machine. It is secure. Go and check it out. There is a link in the description box below. I think it's a great piece of software. I'm using it. You can either buy that annual membership, which has got limited time remaining on it, or if you want to try it on the monthly memberships, then you can do so as well. As with all sponsors, there is an affiliate code here for you to use. I will get a little bit of kickback if you go and sign up for this software, but I think it's great and I'd love to know what you think too. So go and check it out. Links in the description box below. So, as I said, record keeping is absolutely important. But what if you're not doing anything wrong? What if you're just an investor that's looking to start stacking silver and gold? The first thing that you need to look at is the capital gains tax on these stuff. Now, I'm not a tax advisor, remember, I'm just a guy who talks about shiny things, but there are a distinct difference between the types of silver and gold that you buy and whether or not ultimately you are going to have to perhaps defend yourself vehemently against HMRC, or just simply send a little reply saying, nope, they're bought sovereigns and Britannias and they're capital gains exempt, so job done, thank you very much. Even though you might have capital gains tax exempt products like sovereigns and silver Britannias or gold Britannias, they will not stop sending you a snotty letter if you cash all of this in and say, hey, we noticed that you've got a really large sum of money that's come into your bank account, so can you just verify that and you know, we think maybe you've made a gain. Can you check that for us? And you just send a message back with your proof of purchases, and again that comes back down to record keeping. Easy, job done. However, if you've got a mix of stuff that's in your own personal stuff, whether it be, you know, bits of poured silver or poured gold that I make, or other people bits of poured silver, there are a lot of people who make poured silver at the moment, a lot of following for it, and that's all great, but ultimately those things potentially could be chargeable under a capital gains tax rule. Now, there are other rules for capital gains that you need to factor in. There's an annual allowance. So if, for example, every year on your tax form, whether it be self-assessment or you do a separate capital gains tax stuff, if you put in that you've made like just a couple of pounds profit a year from your CGT, you know, non-sellable stuff. So every year you should, if you're not already, every year you should be trying to use your allowance. I've written here, it's exactly £3,000 a year per person at the moment. So if you're in a partnership with somebody, married, you can use their allowance. You can transfer assets to your spouse and they can use and sell it. So really important to try and use that. But if you're doing that every year and you're sort of selling, I don't know, 50 grand's worth of stuff, but you're only declaring that you've made just the £3,000 worth of the CGT profit, that's a bit of a red flag. It's like the same thing with self-employed people saying that they've earned only £12,570, which is the amount that we earn here in the UK before we start paying income tax. You know, it's a big red flag for that. Now, point number 3 that I'm talking about on here is business versus investment. Now, there are a lot of people who flip coins. In fact, one of the hottest coins for flipping right now is this error Britannia, which was struck on a copper nickel blank instead of a silver one, but it's got Fine silver written on it. The Royal Mail, whoops, Freudian slip, the Royal Mint really made a big boo-boo when they did this. Now, there are a whole host of different questions about whether or not this is capital gains tax exempt. At the end of the day, it's got a denomination of £2 on it, as you can see here, but it doesn't conform to the standards set out for a silver Britannia. So is it truly a CGT exempt coin of the realm? Is it legal tender? Just because it was made by the Mint doesn't necessarily mean it was or is a CGT exempt item. There are also what are called chattel exemptions. So this could be chattel in a non-tax advice kind of way if it's portable, personal, private, property basically. So can you pick it up? Can you move it around? Is it personal? Did you buy it from a business perspective? Did you buy it specifically to flip and make money? Those are questions that will be asked. There are things that HMRC also use called the badges of trade. So that's sort of business versus investment. Now, where this comes in is there's nothing wrong with flipping coins. I've been flipping coins for 10 years under my own personal sort of wing. And when I got audited by HMRC, I talked to them about this. And because it was very separate to my business, that's absolutely fine. Now, if you are running a small business, perhaps you've got a side hustle where you're buying and selling a little bit of bullion, or you're flipping an odd coin here or there, and you're doing it under, your YouTube name or your whatnot name or whatever it might be. You've set up a tiny little micro brand, and you may be only turning over a couple of £1,000s a year, making a couple of £100 extra pocket money a year. That's very different though, because that's a business, and HMRC will know and they will come after you for that, especially if you take this coin that you think is a personal portable private investment that you've bought just for you, but then you sell it on social media under your own steam as Joe Blogs Bullion on YouTube or Joe Blogs Bullion on whatnot. That's different. And the delineation there is really important to get right. So make sure that you are not mixing. This is one of the biggest red flags out there that I was told about by HMRC. I don't do this. I keep my personal and business records very, very, very separate. Separation of church and state, imperative. And they told me one of the biggest red flags is when people mix business and investment or business and personal stuff. So if you've got business assets, or if you're running a micro business, make sure you keep good records of that business and keep them separate to your personal stuff. Okay, next section that I've put on here is banking data. Now, unfortunately, this HMRC Supercomputer Connect system is getting all the data it needs from your banks. That might sound like a crazy thing if you're outside of the UK, perhaps in America, but I don't know what the rules are in America, whether or not the IRS can spy on your bank accounts. But here in the UK, banks send the data to HMRC on a regular basis. There is also a requirement for e-commerce platforms to do that. So PayPal, eBay, whatnot, all of these other big platforms, Vinted, there's loads of them out there. Etsy, they will report sales, they will report data. I've had to do it on my both my professional and personal eBay accounts, where I've had to put my national insurance number, so my social security number, equivalent for you US people, and then that data is going to be sent off to HMRC. So interestingly enough, when I log into my HMRC portal, because I'm a self-employed person, I sort of have this, I've separated business and private stuff, but when I go on to submit my tax return, I have to kind of amalgamate the two in the different sections. I've got a self-employed section and I've got then like a capital gains section, for example. So the fact is that when I go on there, last time I did it, there was already pre-populated data that it said, we think that you've earned this much already. And it didn't itemize where it all came from, but some of the figures I undoubtedly know came from eBay, which is not concerning because it should be there anyway. You should be declaring your taxes properly anyway. But also the fact that they knew about it is pretty scary. Now, the other thing is when I was audited by HMRC, they actually came to my home, to my place of business, to have a chat and go through all my books and go through everything. And when they were doing that, they had a lot more information than you would think that they would have. But of course they do, because they've got a £100 million supercomputer that is sitting there absorbing all the possible data that it can. And it's then backed up and cross-referenced against all the banking data, all the online sales data from places like PayPal. And they actually, when they went through all my books, they could see quite quickly that I had very good bookkeeping. I have accountancy software that logs and tracks everything straight from my bank. The records on there are good. The expenses are good as well. But what they did have is a list of transactions already that they wanted to know about. So they went through and double checked against the transactions. And very interestingly, one of the transactions that they had flagged was a PayPal transaction from a customer I had in Hong Kong. And it didn't match up with my bookkeeping. And now that was a simple mistake from my end, because when you sell something through PayPal or through your website using PayPal as a checkout, the item in question was £500, and ultimately there are PayPal fees. So I got charged PayPal fees. And then when something came in from my bank, sorry, I've got someone messaging me in the background on my phone, so I'm just going to put that on silent. So I had the data come immediately through from my bank. So PayPal cashed out to my bank. The PayPal transaction then is automatically captured by my accountancy software, and it's a different number because the PayPal fees was taken out. So £500 was the sale, but only 470 odd pounds hit my bank account. Now, of course, there's a disconnect there. There's no necessarily, I haven't not paid enough tax, because ultimately that cost has come out and everything. But what it does mean is there's a disconnect, because PayPal reported a sale of £500, but I've only reported a sale of £470. So technically it means that my turnover was slightly lower than it should have been on my accountancy software. So what I should have done is have it as a payment of £500, and on the expenses for payment processing fees, I should have taken that off to get the balance. So that's really interesting, but they knew that. They had that data, they had that ready to go when I had that audit, which was really quite interesting. Now, the last section, we're just going to have to talk about record keeping. And I've written here, doing nothing wrong, but you have to prove why. And that's the biggest thing that comes out of this, because unfortunately in this world, the mantra is paint everyone with the same brush, send out thousands and thousands of scary sounding letters. By the way, if you're wondering what this is, it's just a little bit of tarnishing on there. Sending out thousands of scary letters saying, we think you owe this much tax based on all of the records. And then hoping that there are people out there who are too scared or too ignorant to know how to counter the arguments with HMRC and say, actually, do you know what? No, I've not done anything wrong. This is why, and this is the data. The unfortunate thing is, even if you've done nothing wrong, but you haven't kept that data, you can't just say to HMRC, oh, no, actually, all of that money that I cashed in with, Backyard Bullion, I sent in, 100 sovereigns and I've got, 700 or 70,000 pounds worth of cash in my bank account. Or that all of that was sovereigns, governor. Honestly, honest to God. They'll say, well, that's great. Thanks for saying that, but can you prove it? And if you haven't got the proof of that, now it's easy if you sold them to, Charles, you'll have a sales record of you to them, but you'll also have to prove where you bought them from potentially. Not all the time, but an audit trail, anti-money laundering trail is very, very important. And it's not just from a tax perspective, from an HMRC perspective, but it's also from a banking perspective, because not only have I been through HMRC audits looking at my personal and business tax affairs, but I've also had challenges from different banks about anti-money laundering checks when money comes into a bank. So that could be completely innocent. I'm a chaser of interest. So I like to have regular savings accounts that have those good interest accounts. There's some in the UK right now. You can get 8, 9, 10% even. I had one last year at 10% with Virgin Money. It was great. But when I set up those accounts, you fill out the boxes to set it up, how you're going to fund it, what the source of money is you're going to fund it from, and so on. And even though it's a couple of £100 a month, it's nothing massive. And half the time I'm funding it from just savings account anyway. They want to know. And there was one bank that I was putting £200 a month in, and they came back with a full anti-money laundering requirement check. They were like, right, we want to know your past income for the last 5 years. We want to get all of your tax records, all of the, where you're getting the money from. We've also been, I say lucky, but also unlucky enough to have a little bit of an inheritance come through. So it's like, can you prove the records for that inheritance? And because I ticked the box on, on the thing, I put source of funds will be savings, income, and inheritance. I wasn't trying to hide anything, but then they came through with this. And I'm like, do you know what? For £200 a month, for basically what ends up being about 1/4 of a percentage point more than I would get from an easy access saver with a bank that I've been banking with for 25 years, actually, I really can't be bothered with this. So I just replied saying, really sorry, but actually it's too much information, private, personal stuff for me to send for this amount of money. So I'm just going to decline. You can shut my account. And they were fine with that. Interestingly, I did get challenged another time by my platform that I use to invest in stocks and shares, because we put a lump sum in from this inheritance and they want to know where that came from. And that's kind of a little bit more like, yeah, sure, well, that's a little bit more understandable. But it's there. It happens all the time. And without the record keeping, you're not going to know. And that's super, super important. And it can be the same from an inheritance perspective for gold and silver. So a lot of people buy gold and silver to send off for inheritance or to save for inheritance for future generations. You might not think it's a problem for you because you're going to be dead and gone by the time that's a problem. But I think about this for my kids. You know, if I'm going to be giving, I don't know if I will yet because gold forms part of my retirement strategy at the moment. But if there's any left over when I'm dead and gone, and I don't know, my kids have, 20 sovereigns each or something that they take into the bank because they don't care, they don't want it, they need the cash to buy a house or whatever. You know, they cash it in. You know, that could be 20, 30, 40, 50,000 in 30 years' time, who knows? And they're going to get challenged by their bank. Certainly if they're buying a house, the solicitors are going to want to try and pass them through anti-money laundering checks. Where did you get that money from? Oh, I inherited 20 sovereigns from my dad. Did you? Did you actually? Yeah. Was it in his probate? Oh, no, he gifted it to me. Oh, can you prove when he gifted it to you? Oh, yeah, 20 years ago. Oh, have you got a letter to prove that? There are all these things. Because, unfortunately, the Connect system connects everything together, and it's only going to get worse as the time goes by. And talking of time going by, we've been talking for 20 minutes, so I think it is probably time that we wrap this video up. I could talk for hours on this. I really could, because it's so important. And I do hope that you've got some semblance of information about this. The nuts and bolts of it, in a summary, is you're going to get connected by your tax authority. Lifestyle, wrong claims, wrong amounts of tax declared, business versus investments, business versus private. Does it all match your banking data? You know, this stuff, you might be not doing anything wrong, but it's going to get reported. Record keeping. Get those records in order. Cool kids, if you've not checked out the Vault Co, it is a really good piece of software. I'm using it right now to track a lot of my personal investments and my crypto stuff. It's really, really good. It's off-grid, offline. It's very secure. It's a really, really cool piece of software. And as you saw in the sort of integrated advert, it is a really, really cool piece. So very much get in touch with them. Links in the description box below. Otherwise, cool kids, let me know your thoughts on this subject. There are other elements I haven't even covered yet. I could go into lots of other little bits. But for now, that is it from me. Thank you all for watching. We will see you on the next video. As always, make sure you like, share, comment, and subscribe for more.